Hi, I'm Chris with Newvision Asia. Today I'm going to be talking about trading companies, a really brief history of them, how they're set up, how they work with you, the buyers, and how they make their money, the fees they charge you. So trading companies have been around for about 30 years now in China. Originally they were nothing but more than export companies. They had an export license, they helped process some documentation, and they were allowing factories to get their goods out of China. These days, there's really three primary trading companies out there. There's the giant state-run conglomerates. These, if you've ever been to the Canton Fair, you'll recognize because they control an entire aisle in a product zone. There might be 15 booths. There's big lights on top. The header, the name's all the same. Everybody's business card is the same, but in each booth, there's different types of goods, products. The advantage to those large open market conglomerates is if you're at the show, you can combine a lot of different stuff together to build out your shipment. The second type are the smaller, but smaller could be relative. They could still be doing $100 million, but they could also be just someone starting out working out of their house. These trading companies are newer. For the smaller ones, one of the larger, the larger older ones, they may have bought out a state-run license. How they did that's their own business, but they now control their own destinies. So they'll mark up the goods as much as they can, that they can maximize their profits. Then you've got design houses, and these design houses, they're making their own new products. They're probably not showing them at the major trade shows or on Alibaba, and then they're going to charge you more for it, but hopefully you're going to get new unique products out of them, not as much the open market items. What is the structure of a trading company? Well, they've got their owners, their directors, but the main contact you're going to be concerned with as a buyer is what they call their merchandiser. This merchandiser is going to be in charge of day-to-day contacts with you, receiving orders, forwarding orders onto factories, getting the initial shipping information right that's going to go off to the shipping clerk to prepare the documents. And this is the person you want to be on good terms with, because if it's a large conglomerate, this merchandiser most likely doesn't have a very vested interest in the relationship between you. Of course, it's their job and they want to keep everyone happy, but they're really not going to be deriving huge bonuses from how well you do with the orders and that. So it's really, like you'll hear people say, it's relationship building. Keep that one happy. If you've got a complaint, keep it official, but just be respectful towards that merchandiser to make sure that they don't just decide not to answer any of your emails, because unless you've got a presence in Asia, your own employees, you're going to be at the mercy of that person trying to get more information out of the factory. So that person then will also liaise with the quality control person. Most trading companies have their own quality control teams, and they'll be sending these people off to the factory to do inspections on your orders that you've placed. They may go halfway through the production process as well as towards the end. This is not to mean that you should rely completely on your trading company partner to do the inspections for you. 100% always send in your own team member or contract it out to a third party that's going to do the inspection based on what you've decided. How do these trading companies work from a financial standpoint? Well, they're buying goods from a factory and then reselling to you. So they take what we say is a financial interest in the goods. They're going to mark it up themselves. They're going to mark it up higher that you might get from different types of partners out there. But that's because they have to offset the risk. If you don't pay, they're still going to need to pay the factory. There could be payment terms. So all of that's going to be calculated in. and they're really going to try and make as much as they can because they're keeping all those costs hidden from you of what they're paying the factory. So if they can make 40%, they're going to make 40%. If they can make 80% and it works for everyone, they're going to want to make 80%. What are some of the advantages of working with a trading company? Now, you may be paying more in a markup that you don't know what you're paying for. However, as I said earlier, they have QC personnel. So you're getting an extra layer of protection that you should take advantage of. And have your merchandiser, have that QC person go out a couple times if they're at those factories or in the area to check on your goods and give you regular updates. Number two, sometimes you think if you're working directly with the factory that it's always going to be better. But if the factory doesn't have huge amounts of capital, they're always going to want 30% down and 70% at the time of shipment. Whereas a trading company, especially an established one that you have a great relationship with, that you've been doing business with, you can ask them for terms or gently guide them to giving you terms. These kinds of terms may be only 10% down, 90% at shipment, or what a lot of people will do is they'll start with 30% down and then ask for the balance 30 days after the goods have shipped. So hopefully the goods have already arrived, you've sold some, you've got some cash flow moving, and then you pay the balance out. Of course, this does put the trading company at a little bit of a financial risk. That's why they've got the bigger markup that they're offering to you. But as long as you keep paying them slowly over time, you may even be able to work it down to zero down, and then basically a line of credit, 60-day terms. I have even heard of people getting 90-day terms, but they're moving millions of dollars through those factories. They always pay on time, especially they'll pay a few days earlier before the 90 days hits, just to maintain that good relationship. So we've got QC, you've got payment terms. Another aspect of a good trading company partner is if there's an issue with the factory and they need to find another one, they're going to help you do that. You want them to make sure that they're giving communication to you that they're looking to do that, but they'll go out, they'll spend the man hours, the resources to find an additional factory out there for you. So you can get that advantage of not being stuck with just one factory that if there's problems with, you could be stuck. So that's advantage number 3. Advantage number 4 to a trading company is you may not have the volume from one specific factory in order to maximize your shipping, which means normally filling a 20-foot container. So with a trading company, especially these larger open market types, you may be able to combine 8, 10 different items into a container. So if you're a new buyer trying things out, you've got a variety of products that you can look at. You're not just hoping that the one item you bought, that you bought a ton of, is able to sell. So you'll really be able to try the market. You can mix containers. You can add new products on in future orders. So you get rid of the poor sellers, you keep the best sellers, you bring something new on, and you're keeping your containers full. And it is far more cost effective to ship a full 20-foot container than doing what we call LCL cargo, which is putting a bunch of stuff on a wooden pallet, wrapping it up, and shipping it off. It's also a lot safer. So these are some big advantages of using a trading company. These trading companies, you'll find them on Alibaba. You'll find them at trade shows. You can even find them just through Google searches or a Baidu search, B-A-I-D-U. But like with all suppliers, make sure you fully vet them. And by doing that, I mean ask them for who their other customers might be. How many years have they been in business? Don't just trust what they've posted on their website, because anybody can create a website. You can make it say anything. I've seen suppliers use photographs of neighboring factories and say it was their own. So do the same type of due diligence when you're looking for a trading company partner. Oh, and one last advantage. Sorry, forgot about it, but it's a big one. There are factories in China that have no presence on Alibaba. They do not go to trade shows, and they're big. And they're top-level factories. For example, there's some of the factories that make the bedding sheets for some of the biggest name brands out there. They're not really looking for new clients. So one, you as being halfway around the world, it's going to be hard for you to find them. Number two, even if you do, they're not interested in talking to you. They probably got enough business. But you have a good relationship with the trading company. The owner of that trading company may know the owner of that factory, and they're going to get you in the door. They're going to get you better payment terms than you even thought. So you can really come online with even higher quality products than you were originally planning at better prices, even through the trading company, because of the relationship they've got with these other factories. So keep all of that in mind when you're thinking of a trading company. I know as buyers, sourcing agents, we're all trying to get the lowest cost, but sometimes the lowest cost can be found through adding another layer in between you and a factory. So with that, my name is Chris with Newvision Asia. Thank you for watching. Click and subscribe. I'll be releasing more videos on all the other facets of sourcing in China, sharing my 20+ years of experience with everyone. Thanks.